Hello, and welcome to this week's edition of Tax in 10 with me, Rachel de Souza, and Andrew Robbins. We are both tax partners in RSM's London office and have a wealth of experience in dealing with a wide range of private client matters. Your feedback is valuable to us, so do keep it coming, especially if you have thoughts on any topics you would like us to cover. You can contact us by email, and our email addresses are at the bottom of your screen. Now, Andrew, I hope you have your bags packed in preparation for our visit to Jersey shortly. As always, I'm looking forward to seeing friends and colleagues when we're out there and talking to them about the thing that Jersey is most famous for.
Potatoes.
What? No,
Cows?
what are you on about? No, not cows. I mean trusts.
Well, personally, I prefer potatoes, but I admit there's not as much to talk about with them. On the other hand, there is loads to talk about in relation to trusts, starting with the question of whether they're actually still relevant to our clients. So, what do you think?
Well, I do think you raise a very pertinent point. And it's certainly true that we are advising on fewer trust setups now compared to, say, what, about 10 years ago.
Yeah.
But certainly, I do think they're still valuable for the right client.
So, as anyone who watches us regularly would expect, this is the point where I'm going to say, before we talk about that, let's have a bit of context. When I first started dealing with offshore trusts in around 2001, everybody and his dog had one, and a lot of the time really didn't have a clue why. There were lots of structures that were created purely for tax purposes in the 1990s, and already by the early 2000s, they were causing real headaches, which is one of the reasons I think why trusts got a reputation for being artificial and complicated.
So, but let's roll on to the 2020s, and the trust environment really is quite different now.
Yeah.
No longer is the tax tail wagging the dog. These days, trusts remain part of the options for wealthy families as a structure to hold their wealth. But in most cases, I would say tax is really not the primary focus anymore. The focus is absolutely on an appropriate way in which to hold wealth, but for the current and the future generations.
Yeah.
And when I talk to clients about trusts today, I am mainly discussing things like asset protection, and that will include things like protecting the family wealth from children who get divorced, retaining wealth and using that for the benefit of the family over a number of generations. And, even in some cases, effectively using the trustees as a kind of like a mini family office
Mhm.
to administer wealth and help the family think about, how they are actually investing their funds and what they're actually using that wealth for.
Yeah, I totally agree with that. Um, but let's not ignore the fact that in the right circumstances, trusts do still have big tax
Mm.
advantages. And I think that these days that tends to fall into two different categories. So we have new trusts
Mm.
being created by non-DOMs, and we have existing trust structures that have been around for a while. So if I think about new non-DOM trusts first,
Mm.
the reality is that since April 2017, it generally only makes sense in the UK tax context to set up an offshore trust if you're not UK domiciled and you're not UK deemed domiciled. Because in any other situation, there will be a tax cost on the way in, and the trust will be transparent going forward.
Mind you, I have recently had a client who was so focused on the asset protection advantages that the transparent nature of the trust did not prevent him from establishing an offshore trust. And I think that's a point really worth bearing in mind. Obviously, in this case, he was a UK DOM.
Mm. And when we talk about transparency, it is only for tax purposes.
Mm.
If you've got an offshore discretionary trust, the assets genuinely do belong to the trustees, which is why asset protection works, even if UK tax law says we'll tax the settler on them. I think there are other exceptions as well. So if you have a company shares that qualify for business property relief, so that they're exempt from inheritance tax. You can put those into trust, and people still do.
Mm,
But I think those cases are really in the minority.
yeah,
And so, in a more typical scenario, a non-dom settling an offshore trust, they can have a structure that provides protection from inheritance tax and long-term deferral of income tax and CGT, as well as those non-tax advantages we already talked about.
that's right. And I think it's a similar picture for older trusts, although it's a little bit more complicated, isn't it?
Yeah.
So if the settler is no longer alive, then beneficiaries in the UK are only going to be taxed when they actually receive benefits, regardless of their domicile status. And of course, in a lot of cases, the ability to take interest-free loans allows trustees to put, quite substantial amounts of cash into the pockets of the beneficiaries at what is really a very low effective rate of tax.
Mhm.
And so, this means that in a lot of cases, existing trust structures are, well, let's call it a bit of a golden ticket, and they can be worth hanging on to, even if we would not have set them up, in today's environment.
Yeah. Which means that the trusts to watch out for are the ones where the settler has retained an interest and has been resident in the UK typically for more than 15 years. Because those trusts can throw up all sorts of problems, which can be anything from, you lose that quote unquote protected status
Mm.
because you add value into it, right through to the settler may have become UK domiciled, which means that the trust then again becomes transparent and all income and gains will be taxed on the settler as in the year they arise. And I think that one is particularly nasty because it can be really hard to spot when somebody has changed from I've been resident in the UK for a long time to I've settled here permanently. And I think we're going to see a lot more challenges to that position from HMRC as time goes on.
I also think we will see more and more trusts being relocated into the UK. That's partly to simplify the tax position of the trust by bringing it fully within the UK tax system, but it's also a question of cost.
Yeah, I've actually done a number of these now, and smaller value trusts have been brought to the UK, and in my experience, it can work really well. We know that when the size of the trust starts to fall, fees become a real sticking point. The trouble is, partly, trustees can't make money at a level the family is willing to pay, and partly, whatever level of fees the trustees charge, the family is going to be resistant and unhappy because they can see those costs just draining away the remaining value of the fund. So moving onshore is often a really good solution for that.
Mm. And it's also worth saying, isn't it, that whenever we talk to clients about setting up trusts, we have a very open conversation with them about trustee fees right at the beginning of the conversation.
Yeah.
Offshore trusts are complicated to run properly. And if you do try to do it on the cheap, I mean, you're kind of asking for trouble. So settlors need to be comfortable with the expense that's going to be incurred. And really, if a realistic level of trustee fees makes you kind of wince, then a trust is not the solution for you.
Totally. Also, just before we finish, I think it's worth emphasizing that although this may come as a shock to some, the UK is no longer the center of the universe. And UK taxes will often not actually be high on the list of anybody's priorities. So, very regularly now, when we're looking at creating new trusts, it's at least as important to think about US or French or Australian or whatever tax implications as it is to worry about how things will be taxed in the UK.
Yeah, again, very true. But ultimately, I'm really pleased we've reached a conclusion that trusts remain appropriate in lots of circumstances, as otherwise, this might be our very last trip to Jersey. Anyway, on that note, do you have a recommendation for us?
I do. I recently rewatched the film Miss Sloane, which is Jessica Chastain, um, as a lobbyist in Washington, and it's kind of a political thriller. It's all about the lobbying and gun control and things in the US. It's a bit, if you remember West Wing, it's a
Mm,
bit West Wing style. It's
okay.
really smart, really fast moving. I mean, really, really good fun. So if you want something that will make you feel at one level intelligent for following it, on another level stupid because the main character is so much cleverer than everybody else
Ah,
is, Miss Sloane, really recommend it.
okay, I might give that one a go. Well, thanks everyone for listening, and we will see you next time. Bye for now.
Bye.